Venturing into the stock market is a roller coaster ride, and sometimes things go unexpectedly, but you have to watch your next steps or you'll have the biggest regret in your life. The stock market gives you an immeasurable amount of profit if you manage to get in at the best time in the stock exchange. However, the stock market experiences huge crashes that make you feel sorry about your buying power. It's really hard to explain the way the stock market works without getting technical. And if you want to understand the basics firsthand, I recommend you watch our other videos first so you'll get a clue about what we are saying. And give our videos a thumbs up. You can also turn on the notification bell to get updated with our future uploads. But make sure to do these things before the stock market crashes again. Going back, here are our top 10 things to do when the stock market crashes. Number 10. Chill. Don't panic, and better yet, don't do anything at all. Sure, it is maddening to see the stock market exponentially drop its value overnight, but you must keep your chill and don't let your emotions take over. Being impulsive won't give you a good lead at these kinds of times. Panic won't do any good even in the stock market. Not only because panic itself is horrible, but because stock market crashes are pretty much common. It is almost impossible for the stock market to grow without experiencing momentary crashes. Have you ever seen a stock market board that has smooth lines on its graph? That's right, there's not one. So chill first and don't be impulsive. Number 9. Research the history. Know that crashes are short-lived and it's a part of the process, but you can also predict the life of the crash depending on previous crashes. If you will observe previous crashes, the average number of days that a crash can last is only about 100 days. Some last even fewer than that. Since the 1950s, there have only been 3 crashes that lasted longer than 100 days. Even the current pandemic, which affected pretty much everyone on the planet, caused a crash that only lasted for 33 days. Number 8. Second opinion. Even though a stock market crash can only last for a comparatively short period of time, you should not take it lightly. Crashes should not be taken irrationally, but should require deep thinking when managing it. And you must admit, you are not yet an expert when handling a stock market crash. That's why financial advisors are here to save the day. They know better how to possibly save as much of the original amount of money you put in the stock market. Also, they have the experience and skill to predict if the crash will last long and if its effect will be bad. Some crashes produce a big return at the time of recovery, but some don't. So if you want to know which could be the case, ask a financial advisor. Number 7. Reassess holdings. You need to review your portfolio and look whether the crash has made an impact to your holdings. Looking at your portfolio for an in-depth review will help you reassess if the crash will affect you in totality. If you've put all your money in one company and its industry is heavily affected by the crash, you're likely doomed. When this happens, you need to review if your capital has already been paid off before the crash happened. If yes, then chill and let the crash end. If not, and your money went to nothing even before the crash, selling your shares can be an option. Number 6. Avoid margin. The stock market has crashed, prices drop. Why would you think getting margin would be a good idea? Borrowing money in a crash will be a terrible idea since the losses you might incur will be terrible. If you are lucky enough, results will be good, but not unless you are a stock market junkie. Avoid gambling more in this foggy casino. Margins are created for you to secure credit risks, and at this time, it's not suitable to put your deposits at stake. By the way, have you encountered a major crash in the stock market? If so, what did you do? Please comment down your answers and let's see if the YouTube community relates to your experience. Going back, the next 3 steps are quite important, so make sure you take good note of them. Number 5. Be a nibbler. In times of a market crash, the best thing to do is act like a nibbler. During a stock market crash, brokerages have cut off their commission fees, which means there's lower costs when buying stocks. At this time, it is encouraged to buy bits and pieces of big companies that offer their stocks at a very low price. Plus, you might get those stocks at a discounted price. Once you own the share, the current status of the stock market has nothing to say already. Number 4. Buy dips. In line with number 5, you should take this opportunity to make a stock market sale. Dips are when stock market costs go to their lowest possible price, And when that happens, what better to do than purchase all that you can? Some may never go as low as rock bottom, but at least you can get them at a lower price compared to their original value. And if you know how the stock market works, you already know that buying a stock for a low price will be a great start to grow it for a higher selling cost. Number 3, don't skimp. Even though some of the big companies' stocks are sold for a lower price, you should not pour your entire money supply on them. They'll still win the game no matter how cheaply you buy their stocks. When the stock market crashes, innovative companies will use this opportunity to borrow loans for a lower price. That's one problem of a stock market as a whole. What goes for one goes for all. That means, even though big corporations can borrow loans on their original price, they are allowed to borrow the same at a cheaper price as everyone else. This low-cost lending rate is good for smaller industries for their recovery, but will be even more beneficial for big innovative companies. Number 2, look for a ride prospectus. Cliche as it may sound, when things fall down, by the time they recover, it goes up higher than it was before. And yes, it's true in the stock market. Like I've said, stock market crashes are temporary, and this allows the recovery to be ultimately profitable. Johnson & Johnson, for example, went down from a pitiful 8% but went up to 57% on its recovery. It's because sickness is inevitable, and so is profit for Johnson & Johnson. Taking the ride and looking for prospectus will help you find the right company to buy stocks or invest in, depending on their nature. Number 1, long-term. Ask yourself, what is my long-term goal? And when you know it, stick to it. If you plan to be a long-term investor, then stick to it and endure all the momentary noises in the stock market. Again, crashes are normal, and if you'll stick to keeping in your investment, you might get what you wanted all along. If you are a trader and you're committed to being a long-term stock market nomad, then stick to the game of buy and sell. Either way, it's your goal that will matter despite all the hyping ups and depressing downs in the stock market. Do you know someone who experienced a major stock market crash? What did they do? It will be nice to share this video to them and see if they agree on our list. Once again, please like this video and subscribe to this channel, and hit the notification bell to get updates on our future uploads. That's it for this episode. Thank you all for watching.